Perfect. Thank you, Raleigh, and everyone there at Trading Pub for having me today. It's always a pleasure. And it's going to be a fun session. We're going to cover a few different things, and I'm going to try and cram in as much as possible, but make sure that the entire session is filled with value and things that you could take away today and help you with your trading. Just out of curiosity, how many of you are either interested in trading binary options or are trading binary options? Just to kind of get a feel here. So whether you're currently trading or if you're interested. Okay, few people interested, no, yes, me, currently trading. Okay, excellent. Well, I'm glad that this material then is going to be perfect for those who have joined, because I'd say that at the a minimum 50% of you are either trading or interested, and probably more like 70% as we get a few more people um, sharing their interest or that they're currently trading. So that's good to hear, because I think binary options are a great way to trade. I think that unlike some styles of trading, binary options are a nice complement to any type of trading. So if you're day trading, I think that binary options can be incorporated into your plan. If you're swing trading, I also believe that binary options can be incorporated to your plan. So it's a nice fit for pretty much any trader out there. And if you have been trading, or even if you're just interested in getting started, there are really three key things that need to be addressed. One, how do we know if a market's going to be moving higher or lower, or with binary options closing above or below a specific price? So how can we determine the direction of the market? How can we decide on the right strike price to choose? And how do we know which market that we should be trading in the first place? And so with today's sessions, I'm going to help address all of those things so you're better prepared for trading the binary options market. So in this session, we'll cover how to determine the direction of the market, and how to select the best binary option strike price and expiration. And I'm going to show you how to enter high probability trades. Now, even though we're going to really focus on binary options today, these concepts really can be applied to other markets. In fact, when I first started using these ideas, it was for stocks and options. And then I actually just stumbled upon how great these concepts can be with a few adjustments when trading binary options. So that's kind of the process that I went through in order to create this method for binary options. Before we get started, I'm not sure if it was mentioned before, but it's important to understand that trading involves large potential rewards and also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. So don't trade with money that you cannot afford to lose. This course is neither a solicitation nor an offer to buy or sell futures, options, or binary options, and no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this course. Past performance of any trading system or methodology is not necessarily indicative of future results. That's an important thing to understand. Bottom line, trading does involve risk, and although we're trading for the potential rewards, you can't lose sight that trading always will involve risk, and the trade-off is the potential reward that you're after. Now, I'm actually going to do things a little different today, and we're actually going to spend pretty much the entire time looking at charts. I want to show some things that are going on right now, and just dive into the charts, since that's what you as traders are typically working with rather than slides. And so I hope that that's okay with everybody, but rather than a big old slideshow with a bunch of things that make it look nice and pretty, I'm going to just work directly from the charts. And the first thing that we're going to do is talk about market direction. Now, what we have here is a daily chart of gold. And so this is the gold futures contract. And if you are trading binary options with Nadex, the underlying market for those gold Nadex binary options is the gold futures contract. So I'm going to use the gold futures contract to determine whether the market is moving higher or lower, and determining what binary option I should trade. Now, I'm also in my software, I can select just the standard day session. So the standard day session for gold is going to be between 8:20 a.m. Eastern time and 1:30 p.m. Eastern time. And so by just focusing on this period, it's going to help with my binary options trading. The gold futures market does trade beyond this hours, or these hours, but for daily expirations, the gold futures binary options contract is going to expire at 1:30 p.m. And so here I'm just seeing data for that time period that the binary options market for daily expiration is actually trading. So I have a daily chart here. We're looking at the gold futures contract, and I'm just plotting data between 8:20 a.m. and 1:30 p.m. Now, the question here is, how do we decipher all of this market movement, which has been a little erratic at times over the last couple of months, to determine whether the market's likely to move higher in the case of binary options, close above a particular price, or move lower and actually close below a particular price? And to help me determine whether the market is likely to move higher and close higher, or move lower and close lower, I use 3 basic indicators to help me determine where the market is likely to go. And these indicators are stochastics, the RSI indicator, and also MACD. Now, rather than just using one indicator, we know that indicators are lagging, and people use them to identify opportunities. But I found that these 3 indicators in particular are very powerful because they help me focus on the best opportunities and the highest probability scenarios. Now I'm really looking for 3 things to take place. Let me go ahead and share this here. One, I want to see that stochastics, and actually I'm going to say slow stochastics here. Slow stochastics is greater than 50, so we have a greater than 50 reading. I'll show my chart so you can see the settings too. I want to see that RSI, and this would be a period of 7, is greater than 50 as well. And I want to see that MACD is greater than the trigger line. Here we go. And this is to identify an uptrend. So I want to see all 3 indicators confirming that there is an uptrend present. Now for a downtrend, it's the exact opposite. I'm looking for slow stochastics to be less than 50. I'm looking for RSI, period of 7, to be less than 50. And MACD with your standard settings to be less than the trigger line. So here we have stochastics, and whenever I see the slow stochastics, dropping back below the signal line here, or I'm sorry, well, here, let's just pull up the charts. Let's go right to the indicators here, because what I've done is I've actually created some custom highlights, which I can do here with my software. And these are the conditions I'm looking at. So stochastics D greater than 50 with my software, and RSI greater than 50 with a period of 7. And this is the MACD differential, which is actually the difference between MACD and the signal line, but it's doing exactly what I just told you, greater than 0. And by identifying these scenarios, I now have, let's get rid of this arrow here. By identifying these scenarios, I now have green bars, red bars, and black bars. So what do these represent? Well, whenever those 3 conditions using these 3 indicators are present, I have a green bar. And whenever these 3 conditions are present for a downtrend, I have a red bar. And anytime not all 3 indicators are confirming the trend, I do have a black bar. So here we see that RSI is greater than 50, but MACD is not, or I'm sorry, stochastics here is slow stochastics. This magenta line is not above 50. So stochastics in this scenario is not confirming the trend. I can take it a step further here and also show it just to make it easy. I mean, that's one of the nice things of being able to program your software. I can create this custom shading for my indicators. But this isn't a webinar on trying to get you to use my software. We just see that it's a nice visual cue. We're able to use the highlighting just to make it simple. So we're not just looking at the set or the value at the far right hand chart. We could visually see whether or not we have a downtrend based on the indicator settings, or an uptrend based on the indicator settings. And when all three confirm, we have a green bar. When all three confirm for a downtrend, we have a red bar. So all three for an uptrend, green bar, all three for downtrend, red bar. So how do I use this information? Well, let's get rid of this. Let's go back and let's just look at the last couple of uptrend bars here. So based on these indicators, if all three indicators are confirming the trend, I do know that I have an uptrend based on these indicators. But on the next trading day, I want to get confirmation that the trend is still intact. So rather than just trading based on this day's information, and this would be the closing price or how the bar completes at 1:30 p.m., rather than just use this information for the next trading day, I actually want to see that we have the previous day's high. So this day's high, which is 1228.3, taken out. So 1228.3 is the high of this bar, and taken out to me just means trading at least one tick above this bar's high for an uptrend. And so here we see that we gap lower, and the market actually closed below the previous day. So the strength really wasn't there behind that trend. And by using this extra piece of confirmation, I would stay out of this trade because this to me is not a strong trend. Let's take a look real quick here with a downtrend scenario. See, here we have all three indicators bearish based on our rules, and rather than just taking this information and going short or selling binary options expecting the market to continue to move lower, what I want to see is that the market on the trading day, the day that I'm placing trades, actually trades below this day's low. This day's low is 1185, so 1180.5, and we just need to trade one tick below that low to get a signal, but we see here that the market gap's higher and continues to move higher. So by using this added filter, I'm staying out of these scenarios. Like here, we have an uptrend based on the rules. Next day we gap lower and we continue to trade lower. So I'm staying out of this mess when the market's just ranging, trying to push to one level and back down to another, rather than getting nice follow through. So the days that I'm looking to trade are like this. Here we have all three indicators bearish based on the rules, and the low of this day is 1188.3. So that means we need to trade below 1188.3, 1188.2 or less, and we see that's what happens on this day. So this is a day that I want to be short, or this is a day that I want to sell binary options, because this is going to be the highest probability signal for me to trade and for me to participate in a market. Here we see this day, we still have a downtrend based on the indicators, but on this day we do not take out this day's low. So on this day I want to be out of the market. I'm not looking to sell short, and that would be prudent and actually work to our advantage, because we see on this day we close higher. So that trigger value is going to be very important, and that's a key part of the signals that I use. Here we see the low of this day is actually 1181.1, and let's just make that perfect here. So 1181.1, and we see on this day the low is 1178.6. So we take out this day's low. So again, this is going to be the day that I would look to sell, be short, or look to sell binary options when we're trading binary options. And we see here, just with these days, this is a no trade because we don't take out that low. This would be a day to sell, and it works to our advantage. This is a day to stay out because we do not take out this day's low, so no trade here. And this is a day that we'd look to sell. So we see with 1, 2, 3, 4, 5 red bars where we have downtrends based on the indicators, we see that using this extra piece of confirmation, taking out the previous day's low, we have 1, 2 trading days, but both trading days work to our advantage. The market actually closes lower rather than higher. So this is the key piece of information that we need in order to determine the best binary option to trade. And let me just, let's do this to make it super easy here. So I have a trend day. A trend day is for an uptrend, all three indicators bullish. And then I have a signal day. And for an uptrend, this would be if price is greater than trend day high. So that's what I'm looking for an uptrend. For a downtrend, I have a trend day. This would be for a downtrend. All three indicators bearish. And then my signal day for a downtrend is if price is less than the trend day low. So these signal days are going to be the days that I want to risk money. So a signal day uptrend, if this condition is present, a signal day downtrend, if this condition is present, those to me are going to be the highest probability trading days for the trend to continue. And for me, the trend continuing would be in an uptrend closing above the previous day's close, and in a downtrend closing below the previous day's close. So this is how I set on my charts. And this is how I use the indicators to identify trends and to determine the strongest trends to trade. So we see here beautiful trends. When we have nice trending markets, these are going to be the easiest markets to trade, and there might be signals every single day. When the markets get a little choppy, then I'm able to stay out of these less than ideal market conditions by using that signal day rule and criteria. I'm able to stay out of a market that is just not taking off and trending higher or lower, and this is going to be the best way for me to risk money in the market. Now, let's look at today, because today we actually did have a trade, and I did have a trade in gold, and this was a trade that was successful. Using the criteria that we just discussed, the low of the previous day. So at the end of the day, I look at this day. So yesterday after 1:30 p.m. Eastern, I could take this data, look at this market, look at these three indicators and say, okay, we have a downtrend based on the rules. So for the next trading day, which was today, the low of this bar was 1179.1. 1179.1. So that meant that if we trade below 1179, we want to get into a trade. And that's what happened. We opened today just slightly lower than yesterday's close, and the market immediately, if you were watching gold today, the market immediately took off, headed lower. So, but once we traded through 1179, we want to sell. We want to sell binary options, and we want to be in the market because we expect that the market is going to close lower, that will close below the previous day's close, and that's exactly what happened today, and so that's why this trade worked out. So that's what I'm doing every day to look for opportunities and to make a decision on whether we should be risking money in the market. Now the next question is, well, how do we use this information to trade binary options? Well, let's do this. Let me kind of like the notepad sometimes. Just makes it super easy to get everything down. So when trading binary options, there are really, well, the first thing you need to decide on is the market to trade. These are my 6 favorite binary options markets to trade: gold, silver, crude oil, the S&P, the Nasdaq, and the Dow. So for me, those are the 6 markets that I look at every single day. So you need to, you could use the indicators and the settings that we just talked about and the signals or the signal day to make a decision on whether or not you should be trading gold or silver, crude oil, the S&P, Nasdaq, or the Dow. Let's, just for the sake of discussion, let's look at the other markets today. We'll look at crude oil. So CL1067 is a symbol I use in my charting software. And we see that crude oil did have a nice downtrend here based on the indicators, but it's been pretty choppy. I mean, here we see a big push higher. The next day we don't close higher. Here we do close higher. Now we close lower. Now we're closing lower. So it's just back and forth. These indicators keep us out of this back and forth whipsaw mess that where there really isn't a clear direction in the market. Instead, the market's ranging and just kind of moving from upper to lower band. So no trade in crude oil, nothing for me to do in crude oil today based on these rules. If we look at the mini S&P ES1067, ES1, we have a downtrend based on today's information. Now, the E-mini S&P and the S&P futures contract actually is open until 4:15 p.m. Eastern time. So even though we see a red bar right now, I would use the close at 4:15 p.m. Eastern to make a decision on what I should do for the next day. But as it's looking right now, I'd say that tomorrow we're going to have a potential sell signal if we have a trigger. But based on the indicators today, we have a downtrend based on the rules. But yesterday, we didn't have anything. In fact, for the last 5-6 days, we see that the market was pretty sideways, no real strength behind that move. So we're out of the market. We're not risking money just because there isn't any strong trend or confirmation. Let's look at the Nasdaq, another market I like to follow, NQ1067. And with the Nasdaq, we currently do not have a trend. I mean, this might change at the end of the day if we end up getting below the 50 value there with stochastics. We might have a downtrend. Right now, we do not. You can look at the mini Dow. Mini Dow, yesterday, we had no signal, so there was nothing to trade today. But now we see that as we come to the end of today's session, it looks like we're going to have a downtrend at the end of the day, looking for a signal tomorrow. Last market that we were looking at today, silver, and silver did have a downtrend. Silver, it was pretty much the same scenario as gold. So the low of this bar was 1637.5. So we needed the market to trade below 1637 since we had downtrend. And today we had that trigger, that signal triggered, meaning that we wanted to sell silver because we believed based on this, the indicators in this method and the probabilities that we should be selling and that the market would be closing below the previous day's close and that we'd have a high probability signal here. So for today's trading session, we're really just looking at gold and silver, looking for opportunities, and they both worked out once we identified that there were some high probability scenarios to potentially trade. So step one when trading binary options, decide on the market to trade. And there are a bunch of markets that you could focus on. I found that with the method that we're talking about today, these core 6 markets are best. And one of the biggest things that I think is beneficial is that it's easier to get into these markets. Like the signals work well in the grain markets too, and like natural gas, but it's a little harder to get fills in those markets based on the signal. So these are the core 6 markets that I'm trading. The next thing to do is to determine the direction of the market. Okay, 3 indicators. Now you have rules, right? So now you have rules to determine the direction in the market and whether or not you should be buying or selling. Then the third thing to make a decision on is whether, you know, the expiration. I trade daily expirations. And I think this is great because even if you're swing trading, you could still trade binary options. If you're day trading, you're actually going to be placing your trades during the trading session. So you're technically day trading, but you don't have to be staring at charts all day long. You could set up triggers and you know, follow along. Daily expirations, I hold the trade to the end of the trading session. So once I identify a signal, once I'm looking to place a trade, I place the trade and I let it expire for a profit or loss. So after you decide on the direction of the market you want to trade, the expiration you want to trade, the next thing that you need to make a decision on is the strike price. And this could be tricky for some traders when they first start trading binary options, because if you bring up a ladder, there might be 20 to 30 different strike prices that you can select. What we do here with this system is to select the strike price based on the previous day's close. So if we know based on these indicators that if during the trading session we trade through the signal day's low, high probability scenario, and the market is likely going to close below this previous day's close, then any strike price above this previous day's close can be traded, because we know that there's a high probability opportunity for the market to close lower, and so any strike above the previous day's close would be a winner if the probability holds true. So what I would like to do actually is to, one, for an uptrend, select the closest strike below the previous day's close. We'll just say PDC. For a downtrend, we select the closest strike above the previous day's close. Why? Well, in a downtrend, if we have a strike above the previous day's close and we sell that binary option, we have a winner. In an uptrend, if we have a signal, remember this is why the signal and the triggers are so important, because if we select, like on this day here, let me do my repeat draw, uptrend, take out the previous day's high. So we want to buy, and we would buy any strike below the previous day's close, so all of those strikes would be winners. Here we have a signal triggered, so we'd want to buy any strike below the previous day's close. So on this day, all of those strikes would be winners. Here the high was 1758.5, and this day the high was 1758.5. So this we closed higher. This would not have been a signal to trade. Here, any strike below the previous day's close for this day would be a winner. Now here we do not take out this previous day's high, so no signal to trade. However, just for the sake of discussion, we see that with this trade, all strikes between this day's close and this close of 1708, all of those strikes would have been losers. So that's why we really need the signal to be confirmed. But that's how to determine the best strike when trading binary options. So after you know the strike price that you want to trade, the next key piece of information is the entry price. How do we want to, how do we decide to get into the option? How much are we willing to pay and how much are we willing to risk? Now let's take a close look at the way binary options work for those who are interested. So this is going to be a little repeat for traders who are currently trading binary options, but for those who are interested or haven't traded before, it's important to understand that binary options, so binary options with Nadex at expiration, and that's what we're looking. We're looking for once we put on a trade, I hold trades to expiration. So I let them expire. At expiration, there will either be worth $0 or $100. So unlike equity options, where if you buy a call and it expires, it might be worth 50 cents, it might be worth $1, $2, $3, $4, it might be a total loss. With binary options, they're considered all or nothing, because at expiration, it's either going to have a $100 value per contract or it will be worthless. Now, if you're a buyer, the price you pay equals the risk. Let's flip this around. So your risk equals the price that you pay. So if you pay $40, that's your risk. If you pay 50, that's your risk. If you pay 85, that's your risk. All right. Now, why would you pay $85 for a binary option if you know that it will only be worth $100 max at expiration? Well, that's up to you to decide, but it might make sense if you know that that's a high probability scenario and the market is significant, like here, let's go back and let's look at this move here in silver. Silver ended up closing 2.25% lower than yesterday's close. So if you knew that there was a high probability scenario for the market to close lower, and the market was actually doing that, then it might make sense for you to risk $60, $70, $80 on an option because the probability that's going to close above this day's close is so low. Now, if we're trading closer to the previous day's close, then it's actually going to probably be more of a $50 risk, or even less than that. But the next question is, well, what if your risk is the price that you pay? What is your reward? Well, knowing that the most you can make on a binary option is $100, you take $100 and subtract the price you paid for your risk, right? So if you pay 40 and that's your risk, the reward is $60. Another example, on the high side, $85 risk equals 15 reward. So these will depend, like for my style of trading, the amount risked and the potential reward is going to depend on the probability that the market is likely to close higher or lower, which we're going to talk about in a minute. But it also will depend on where the market's actually traded when you get a signal. So there are going to be some days for me where it could be that we have a signal that occurs and we're able to get in a much lower risk scenario. Maybe we're risking $30 to make 70, or 40 to make 60, or 50 to make 50. But in high probability scenarios, as long as I'm using the actual probability that the market will close higher or lower, I don't mind a higher risk, lower reward scenario because I'm basing the entries on probabilities. And now, before we talk about those probabilities, let's talk about risk and reward for sellers. Because remember, this was for a buyer. This was for a buyer. So a seller risk reward, how do we determine this? Well, for a seller, the reward is the price that you sell at. So if you sell at 30, that's your max reward, and so on. Now your risk, knowing that the most the option can have, or the highest value can have at expiration, or really during any time, is 100. The risk is going to be $100 minus the price sold at. So as an example, you sell at 30, that's your reward, and you have $70 risk. Okay, so going back to the charts. Oops, we could cancel that for right now. So what did I do today? Well, today I actually sold, not in silver, let's go to gold. My charts are going to play catch up for a minute. But basically, the price that I wanted to get into silver today, I was unable to get in, and the trade was not filled. So I submitted an order, but because there were no traders out there that were willing to pay the price that I was willing to sell at, I was unable to get into the silver trade because I was very specific with the entry price that I wanted and that I needed in order to take the trade. Now, in gold, it was a little different. in gold, let me see if I could bring up the chart. Looks like I'm kind of getting bogged down here a little bit, so forgive me. Let's try that one more time. There we go. So for gold, based on my analysis, based on the indicators that we talked about, and the rule selecting the entry and the expiration and the strike price in gold today, I wanted to get into a trade and sell at $29 or higher. And since things are kind of a little tricky here on the charts, let's just go back to this notepad. We could talk about this trade. So this was based on my analysis yesterday in gold. So today's gold trade, based on the three indicators, RSI, slow stochastics, MACD, I had a sell signal. And my signal was to sell the 1185 strike price, because that was the closest strike above the previous day's close. Remember, in a downtrend, if we do have a signal that's triggered, we're looking to sell the strike price that is the closest to the previous day's close but above it. So I was looking to sell the 1185 strike price, and this was a daily expiration, and my sell price was $29 or higher. So I wanted to sell at $29 or higher. If I could sell at $30, $40, $50, $60 after the trade was triggered, I would be happy with that. But the minimum I'd be willing to sell at was $29. So I was willing to, my reward was 29 and my risk was 71. Now, it was a winning trade, but why would I be willing to risk $29, or I'm sorry, 71 in order to make 29? Because of probabilities. Here, let's go back to, oh, I know what I needed to do. This is an intraday chart of gold, and I'm going to bring up the daily chart. Here we go. And we're going to change this symbol to GC1067. And come on, guy. There, okay, there we go. I know what we need to do. We need to connect to real-time data, and we'll get today's trading data. So why would I want to sell at 29 and risk $71? Because based on the examples that we've provided, we've seen that when a signal is triggered, there is a high probability opportunity that the market will close higher in an uptrend and lower in a downtrend. I mean, just looking at those examples, I think that we were probably at about an 80% winning percentage, which is actually interesting, because what I do is I go back and I calculate the winning percentage for this scenario in gold going back the last year and also going back 5 years. And for the year, I know that 81% of the time the market is going to close lower if the signal is triggered, and it will close higher 81% of the time if the market is triggered with an uptrend. So let me do this. Let's go back here. Let's clear this up. We already talked about that. Okay. So using probabilities. And this is where I do the calculations to determine these probabilities. And today we had two signals. One was in gold. That was to sell the daily expiration at, let's say daily expiration 1185 strike at 29 or higher. The second signal was silver sell daily expiration, the 1650 strike at, and this was actually 28. Oops, 28 or higher. So why these prices? Based on probabilities. Market will close lower 81% of the time in gold and 82% of the time in silver. Now, to determine entry prices, I want to enter, and initially I was using $5, but I've switched to $10. I want to enter $10 better than the probability. Probability, that's close enough. So why do I want to enter $10 better? Well, if I know that 81% of the time historically the market's going to close lower based on the indicators, the settings, and the method that we've discussed. If I know that 81% of the time that's going to happen, after 100 trades, if that probability stays true, I would have 81 winners and 19 losses. And so if every time I had a win, I made $1, just hypothetically to make it easy. If every time I had a win, I made $1, and every time I had a loss, I lose $1. You see that with that probability, we're fine. Now, because we're risking more than we're losing in this scenario, we need to do slightly better than the probability. And so what I want to see is that if I have a probability that the market will close higher or lower, that's 81%, I want it to be better. So for buy signals, I would be buying at 71 or higher. And for sell signals, I'd be selling at 29. Sorry, that's not correct. 71 or lower and 29 or higher, which is what I did today. Because that means that it's okay if we end up buying at 50 and we're risking 50 to make 50, and knowing that the probability that the market will close higher in an uptrend is 80%. If every time we're able to do that, if that probability stays true, then we're fine. We're making money. And that's what binary options are. They're based on probabilities. They're calculated on probabilities. So it makes complete sense to use probabilities to determine when and how you should get into trades. Now, with those probabilities, what happens if the probabilities start to change? Well, we know that everything's not going to be perfect, and probabilities do change. So this is where I think the probabilities are even more powerful with binary options, because if the probabilities get worse, our risk reward changes. Right? Because if all of a sudden we find that in a year the probability that the trend would continue is now 62%, then that means for a buy signal, we're buying at 52, risking, so 52 is our risk and 48's our reward. Yeah, let's make this easier to see. So do you see that? So the probabilities, it's a self-adjusting system. So for a sell signal, we're selling at 48. That's our reward. And our risk is 52. So I think this is where a lot of traders miss out on binary options or struggle. It's because they're using technical analysis, and we are using technical analysis to determine the direction of the market and to make trading decisions. But then many binary options traders, they don't take things a step further, because you could use technical analysis to determine the direction of the market, but how do you determine the right strike price? How do you determine, because that's one of the beautiful things about binary options. It doesn't matter how much the market moves. You don't get any greater benefit if the market sells off 5%, as long as it sells off 0.1% and closes below the previous day's close in this situation, you have a full profit on the trade. So with technical analysis, we could identify the signals, but probabilities are so important, and that's what makes binary options work, because the pricing of binary options is based on probabilities to begin with. So going in with technical analysis and having these probabilities, you have an edge going into a trade. And if the probabilities get better, you just have higher probability opportunities, and if that continues, you're going to see higher winning percentages. If the probabilities start to get worse, if you start to see losses, if the signals aren't working out as expected, the probabilities are going to get lower, and then because the system is self-adjusting, you're actually getting better risk-reward trades. So you're getting more selective, you're getting more picky, and you're looking to make more money on those trades because the probabilities have changed. So I think that this is one of the most important concepts when trading binary options, and it's one that I found that in my experience, few binary options traders actually incorporate and use. Does that make sense? Does that make sense? Now let me show you. There's something that I do every day, and let me slide this over. Basically, what I just described is this table here. Okay, so this is the binary options table that I use, and I calculate these probabilities. So we see here, these are the 6 markets, and these were the signals for today. No signal in the other markets. We looked. We saw that the indicators really hadn't confirmed a signal. So tomorrow it looks like we're going to have more opportunities. But for today, we only had 2 signals. And the trigger price, based on the previous day's low, because they were both signals, sell signals, that is. And the previous day's close, I reference in the sheet just for reference purposes, but this is what determines the strike price. So the previous day's close was 1184.2 because it was a sell signal. We used the strike that's closest and above this previous day's close. So 1185 was the strike I was looking to trade. And then the entry parameters, I wanted to sell at $29 or higher. The market 8:20 to 1:30 p.m. Eastern time. The 1-year probability right now is 81%, and it's actually perfectly in line with the 5-year probability as well. So this tells me that there isn't any real discrepancy between the long-term and short-term. Well, year is not necessarily short-term, but we need at least a year to get relevant data that they're in line. Sometimes these change. You might find that the 1-year probability is at 90 and the 5 years at 70, and so you start to see that, okay, we're really on a nice winning streak. And but I rely on the 1-year probability to determine these entry prices, which is what we talked about in this presentation. We also provide the signals for IG, but I mean, to be honest, if you're in the U.S. and now Nadex offers binary options accounts for many locations worldwide, and because Nadex is regulated, Nadex is the way to go. So that's who I recommend to all traders who are interested in binary options trading. So this is what I'm looking at every single day. Now in the presentation, I showed you how to come up with these values. The question is, how do you get the probabilities for the different markets? Steve, I calculate them. I make sure I calculate them so I know. That's done on the back end here, and we provide these signals. Actually, I taught the system that we just talked about to traders in our Rockwell trading club, and they love the system, they love the method, and they said, hey, I don't want to do anything but get this information. And so we actually use that request to create our product, and I want to share this with you. I'm going to slide this over. So I mean, like I said, I just gave you full insight into what we do here for our binary options signal service. So there's a ton of value right there. But if you want everything done for you, go to rockwelltrading.com, look at products and services, and we do a lot with day trading, stocks, and options. But if you look at the binary options signal system, is how to get these signals every single day. So it talks about it. It looks at some performance numbers. It talks about the markets that we're covering. And this is when you have all signals firing off at once. Here we see different probabilities. You also see that the probabilities have changed. When this was printed, we had a 77% winning percentage or probability with gold. Now it's at 81. Silver was 82, and it's still at 82. So this is calculated for you. We also right now we're including text alerts. So anybody that signs up will get text alerts for free. This is going to be a separate subscription, but that's one of the benefits to joining Trading Pub and participating in these webinars. We're going to include this free text alerts for everybody if they are interested in the signals. And then what happens, we go back to the trigger. I'm following the trigger every single day, so I know when a trade's triggered. I'm putting in an order, and what I do after that, or pretty much simultaneously, there isn't too much of a lag. After a trade is triggered and I put in an order, I send out an alert to everybody who signed up for the service, and they get this information, and they see exactly what looks like, where is it? This is an actual copy of the trigger. So on this day, it was crude oil triggered to sell at $49.50 at $34 or higher. So that's included for free. So binary options are great. If you're new to them, then I think that just what we talked about today is going to be a great precursor to you getting on board and getting interested in binary options. If you've been trading them for a while and you're doing great with your binary options trading, excellent. Maybe this idea is a nice complement to what you're doing. But if you're struggling, you might want to take a look more at probabilities, even consider the probabilities and the rules that we talked about today with the binary options system. So thank you for sharing that link there. And are there any questions? I know I kind of threw a lot at you. I mean, I could have covered the same material in 2 hours, but we try to load these presentations with a lot of content, material, and things that you can use, and I hope that you got a lot out of it. Perfect. Thank you, Steve. Any other questions? Excellent. So let me do, while we're, since there's 2, 3, 4 minutes left, let's take a look at what's going on for tomorrow. Let me make sure that I have live data. And once I connect, I could see, I don't think much is going to change from earlier, but we could run through the 6 core markets that we look at, see if anything looks like it's going to set up for tomorrow. And I think that I'm trying to do too much at once on this machine. Yeah, I could guess what's going to happen tomorrow, even if we can't connect right now. We saw earlier gold, silver, the trend continued. So I'm watching gold and silver tomorrow for sell signals based on a move below the previous day's low. It looked like the E-mini S&P and the Dow. Actually, I'm confirming this on another computer. I have access to everything, so I'm just gonna go through those, even though we can't see it right now. Just so you could take a look at what's going on tomorrow and know what I'd be looking at. So crude oil, even though we dropped today, there isn't a confirmed downtrend based on the rules. So I won't be doing anything with crude oil tomorrow. the E-mini S&P, unless there's a huge move higher in the next 15 minutes, which I don't expect. I mean, even if we get a big retracement back towards 2100, I think we'll still have a sell signal. So right now we have a downtrend in the E-mini S&P, and if that is still true at 4:15 p.m., then I'll look for a sell opportunity tomorrow. We already talked about gold. Gold does have a downtrend based on the rules. Nasdaq does not have a downtrend yet. If the move continues lower tomorrow, we'll probably see a downtrend confirmed. Silver, we have a downtrend, so I'll be watching silver tomorrow. And the mini Dow also has a downtrend, so I will be watching the mini Dow tomorrow. So for me, 4 markets that I will be keeping an eye on: E-mini S&P, mini Dow, gold, and silver. All of them I'll be looking for selling opportunities if a signal is triggered. That's going to do it for me. Thanks everybody for joining and for sticking around, and thank you Raleigh and everybody there at Trading Pub for the invite. It's always a pleasure.
Hey, Mark, listen, thank you